Welcome to Tracking IPDA. This week was a breakthrough in my trading journey as I realized the importance of analyzing multiple timeframes for entry. Previously, I was too zoomed in on the M1 timeframe and missing the bigger picture. Through continued learning, I discovered how different timeframes come together to tell the complete story of price action. By incorporating the M5 and M15 timeframes into my analysis, I was able to identify entries that I would have missed on the M1 timeframe. This broader perspective has significantly enhanced my trading strategy and taken my performance to another level. Understanding the interplay of multiple timeframes has also helped me reduce my fear of losing. I now have a clearer view of the market, which boosts my confidence and decision making. I finished the week with a 12.2% increase in equity. In dollar signs, we're talking $3,065. And overall, we're up on the account by 46.3%, which is $11,570. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, the most important tool you need to track IPDA's movement. Time. Now remember, even though I'm going to show you both buy and sell models, it's important to note that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your higher time frame direction is bullish and vice versa. It's just the probability of winning reduces significantly when you go against the higher time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your high time frame conditional bias. This is a hunt purely for setups. To the hunt, let's go. Monday, July 29, trade of the day breakdown. We had the AM session for sell formation with the entry on the M5. We had no news on this day, but our NFP protocol states that we can take a trade. This is the only week we trade on Mondays without any needing to have any news. All right, let's get into this trade. 9:30 to 10 o'clock is the opening range. We're not trading, we're looking to see what price is doing. And as you can see, we trade above a key high, we trade above London session high. We take liquidity above the London session high and also trade into an old high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range. You would have a swing low right here. This candle closure would have confirmed this swing low, and then you'll be anticipating an execution, okay? So you would have been tagged right here when price comes back into the SIBI. So you would have been tagged at 10:45, breaking even at 11:10, taking out the trade at 11:15 for a total time of 30 minutes in this trade. Drawdown in this trade was 3 ticks for a 6% bagged and tagged. Let's consider factors that made this trade a high probability setup. First, we had the time aspect, is the AM session, yes, and it's post 10 o'clock. Range, we're in the middle to upper quadrant. We're in the premium for a sell. Yes, liquidity. We have a short-term high right here. The price comes and takes. And once it takes it, you see immediate reaction to the downside. 3 out of 3 matching up to make this a high probability setup that netted you 6% for the day. I actually did enter this trade. This was the only trade I took on this account this week. As you can see, July 29, this was the trade I took. And I'm still struggling with my exits. I did close this trade prematurely before it hit TP. My TP was supposed to be below this weekly discount array. It was supposed to be right here, but once price got to here, I got antsy and I closed the trade prematurely. But as you can see, my TP would have been hit. I'm still struggling with my exits week after week. I'm telling you, I'm struggling with my exits, and it's a real thing, man. It's a real thing. I'm working on it, but that's one thing that I need to get better at as a trader on my exits, because I get impatient once I see a little bit of retracement, start to take my money away from me. I'm like, what are you doing, bruh? Give me my money. But I need to trust the model and trust the process, all right? It's not good to be closing trade prematurely. Even though it's in profit, I'm still not sticking to the model if I'm closing all my trades early, all right? Oh yeah, that was the trade for Monday, NFP Monday. Tuesday, July 30, trade of the day breakdown. We had the AM session, sell formation. Let's get into it. As always, we start with the economic calendar, and as you can see, we had high and immediate impact news come out at 9 and 10 o'clock. 9:30 to 10 o'clock is the opening range. We're not trading, we're looking to see what price is doing. As you can see, we had price trade above a key high. We take liquidity above a key high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range. Here is how the time frames come together and create the bigger picture. So we had the short-term low form right here. We're anticipating execution and we're looking to enter on a fair value gap. As you can see, the M1 time frame doesn't have any SIBI, in other words, fair value gap near the 50%. We have one up here and up here, but near the 50%, there is, as you can see, there is no fair value gap. But we did have an M15 fair value gap that formed right in this in the 50% region. Okay, so you would have been tagged here when price comes up and takes this liquidity right here. You would have been tagged in this trade at 10:17, breaking even at 11:01, taking out that trade at 11:04, a total time of 47 minutes in this trade. Drawdown in this trade was 7 ticks or 6% bagged and tagged. Let's consider factors that made this trade a high probability to set up. First, we had the time aspect, is the AM session, and it's post 10 o'clock, check. Post 10:10 as well, check. Range, we're in the middle to upper quadrant, we're in the premium for a sell, check. Liquidity, we have a short-term high right here. The price comes and takes into the M15 SIBI, and as you can see, once it takes that liquidity, you see immediate reaction to the downside, and you know you're on side. So 3 out of 3 matching up to make this a high probability to set up. That netted you 6%. I was looking to enter this trade. I had my limit order up here, but as you can see, it doesn't get tagged because I'm looking at on the M1 time frame for this for the CB. It doesn't get tagged. But I realized on the M15 it had created this CB in here, so I waited to see what price would do inside of the CB. And as you can see, we come into the M15 CB, take that liquidity, displace lower, take this structure, leaves another CB on the M1 time frame, and I got in here at the I got in the CB and rolled it down for 1 to 3. Didn't get in on this account. I got in on my testing account. Show you guys that I actually do take these trades. This is an account where I try out different methods and strategies. So that was this day, July 30th, right here. I took that trade right here. So I saw that it didn't come up high enough to where I was anticipating it on the M1 time frame. But we had the M15 CB that it comes into, takes M1 liquidity, displaces lower, gives you another opportunity. I've noticed this a lot actually. Gives you another opportunity to actually get back in right here on the CB, and I rolled it down for 1 to 3. And that was it for this week. After Monday and Tuesday, we didn't really get any other clean setup with the model. Obviously, I was out of the market. I was done on Tuesday anyway, because NFP protocol states that we're looking to be done Wednesday AM session. I got 2 trades, Monday and Tuesday. I don't really need to be in Wednesday's session either. Okay, and I was done trading for the week. And yeah, that was Tuesday, July 30th. That brings us to the end of Tracking IPDA this week. I hope you guys enjoyed it. A little quick update on my funded account. I didn't take any trades this week in my 50K funded account. Top step, mainly for 2 reasons. A series of losing trades from the previous week really knocked my confidence. I ended up actually losing the 2 100K combines that I was going after. Secondly, I had already took a payout for the month and didn't want to risk losing the account. Okay, so I already took money out, so I didn't need to keep trading on that account. So I took a break to recalibrate. I'll be back trading my 50K account next week, and I will be starting a new 200K combines next week. All right, we're still on the road to 150K asset under management. We just hit a couple of speed bumps, but that's all part of the game. Okay, I'm not giving up. I know I'm gonna make it happen this month. All right, if not this month, definitely next month, but it's gonna happen anyway. Thank you guys for tuning in. See you all next week.